Welcome to Friday's Market Wrap-Up. Matthew Buckley, the Chief Investment Strategist here at Wealth Creation Investing, and coming in for a landing from a very choppy and volatile week. Kicked off earlier in the week, essentially across the Pacific, right? Japan came out with some great GDP numbers, and the next day the Bank of Japan said, hey, you know what? I think we're going to sit on our hands for a little bit and stop printing yen at the speed of the United States Fed, and that sent the markets into a temper tantrum. The Nikkei has been all over this week, gap up, gap down, all over the place, and our markets felt that this week, as you can see. But yesterday, Thursday, you know what? Our Fed, as I talked about in the sit rep yesterday at Top Gun Options, Bernanke is not going to let this market crash on his watch. He's going to have his change of command and turn this grenade over to somebody else. So the Fed's going to do whatever the Fed needs to do to keep this market from imploding, and we saw that yesterday as the market caught a bid. Now, market's selling off a little bit of its, little today, mainly on weak economic data. We had, University of Michigan consumer sentiment came in weaker than expected, but last month was the last report was a ginormous beat. So coming in a little flat here isn't that bad of news, but our cap rate and industrial production, the lowest since the fall, lowest since October. So industrial production isn't good, and our cap utilization rate isn't good. So still seeing some softness in the economy. So on a day like today, bad news can kind of be a little bit of bad news. So the market, folks, is still trying to find its way. We know that the Fed's going to end its easing. It's not a matter of if, but when. But the market's trying to figure out the why, and that's what's been going on this week. Is the Fed going to copy the Japanese, where if it sees some green shoots in the economy, they're going to sit on their hands? Well, if they do that, I think the Nikkei has shown the Fed what our temper tantrum in our market is going to look like. So very interesting times we're trading in, folks. Had a great week this week in the weekly options model portfolio over at Top Gun Options. We're looking a little bit of a sell-off right now, but looking at nearly $2,000 gain, or I'm sorry, $3,000 gain this week on about call it $15,000 in maximum risk. 3 trades on an Iron Condor and a bull put spread on the SPX, and an Iron Condor on Netflix, and as I said, about $3,000 in profit right there on about $15,000 in risk. Still have a long way to go until expiration this afternoon, though, with another potential, let's just round up and call it $4,000 in potential gains. So we could see potential gains of $7,000 on $15,000 in risk, barring that the market doesn't fall out of bed the rest of the day, and we kind of chop around here, which is I think what happens. So very interesting week again, setting the tone over in the Pacific, and I think that's going to continue. This chop is going to continue into next week until we get something definitive out of the Fed. Now, definitive being we're either going to prop this thing up, or definitive being we're going to split, and I don't think it's the latter. I don't think the Fed's going anywhere, especially after the scare this week out of Japan. Okay, I got to run. I got to manage these weekly options positions for my subscribers, and then blast out some trade alerts. Also have a new Netflix Iron Condor going down range for next Friday for our weekly options subscribers, so make sure you check your email and your cell phone for the text alert on that trade. Okay, happy hunting. Make sure you hedge, and I'll be back with Monday's market outlook. Happy Father's Day to all the fathers out there. You earned it, and I'll see you guys on Monday.